In today's video, I'll show you how to take advantage of sectors like XLF, which are giving you volatility edges. I'll show you exactly how to identify them, along with knowing when to use the sector versus a top holding to actually trade the volatility. Now to get started, I'm going to pull up our stock Volatility Box live scanner, and I'm using the daily tab for our exercise today. The daily tab looks at all stocks and ETFs, anything greater than $10 with at least an average volume greater than 1 million shares, and it scans this list every 2 seconds to find any places in which you have a volatility edge. Now today, if you take a look at the list, you had a few sectors that appeared on this list which we aren't typically used to seeing. The first was XLF. You should notice XLF here breaching its long side models. You can see that long here. And it breached both its aggressive and its conservative volatility box models. While the overall sector was breaching its models, we also had some top holdings appear on the list. Goldman Sachs. You had some financial stocks as well. Citigroup. You had Wells Fargo, if I search for that. You had quite a few opportunities inside of the XLF sector, which were also giving you volatility setups. For today's conversation, we'll take a look at XLF, we'll take a look at JP Morgan, in which we exceeded volatility, and we'll take a look at Goldman Sachs and Wells Fargo, which gave us a little bit more tradable volatility. Another sector which also stood out was XLE. Two SPY sectors appeared on our live scanner, which we aren't typically used to seeing. And with XLE, we had stocks like Chevron, and we had stocks like ExxonMobil, which appeared on our live scanner as well. So a bit of a variety to pick and choose from based off of sectors you like to trade and setups that you like to trade. Now let's start first with the XLF, the financial sector. We had a sell-off early in the morning, which took us into our aggressive volatility box models. Took a little bit of a pause here. And then we continued selling off into our conservative volatility box models before we saw that first sign of momentum reversing. This is the 3 EMA crossing above the 8 EMA, the momentum cross. Now you'll notice here inside of XLF, that first momentum cross came towards the end of that lunchtime hour, still in the middle of it, chopped back and forth right near the entry line of our conservative volatility box model clouds. And as soon as that lunchtime hour ends, you can see the momentum kicks into full gear inside of XLF. This is what we're looking to trade. Now, inside of XLF, we also had some opportunities. Wells Fargo, one of those opportunities, appeared on our live scanner as well, breached the aggressive volatility box model clouds. We saw the edge signal. You saw momentum crossing. And here, we started to climb up. And so far, we're starting to even see the makings of that 1-2 punch setup here. We're well outside of even the aggressive volatility box's target lines. This first initial setup was the one that was much more interesting, where you had an entry price near 53.50 that allowed you to take advantage of it. Next one we had on the list, Goldman Sachs. Goldman Sachs, very similar to XLF here, breached the aggressive volatility box models. We even had momentum crosses before sellers ultimately pushed price down towards the conservative models. And from here, we've been building a nice base so far. XLF still looks the greatest in terms of that V-shaped reversal. Finally, we had JP Morgan inside of the financials. And JP Morgan, by 7:30, had already broken well outside of its conservative volatility box models, telling you that, hey, the volatility here, not really tradable. And when you start to see clouds looking like this, compressed, that's really your clue that, hey, JP Morgan is not the ticker in the financial sector that you want to be focusing in on. Now let's contrast this with the energy sector. XLE here, breaching its aggressive and its conservative models. Off of the aggressive, we had the first bounce. Off of the conservative, momentum crossed. So far, looking at the second bounce, the sector's looking really nice. And inside of the sector, if we take a look at some of the top holdings, we had ExxonMobil and Chevron. ExxonMobil breached its aggressive and conservative models, had a really nice bounce before we reversed and gave back all of those gains. So now we're outside of the conservative models, not really too interested in ExxonMobil compared to XLE, which still looks like a little bit better of a trade, especially if you had something like a 1-2 punch setup. And finally, you have Chevron here inside of XLE. Again, looks much better than ExxonMobil, still tradable here, but XLF out of the two sectors, much better in terms of the reversal opportunities, the number of tickers that appeared on our live scanner, where you can pick and choose from, along with the actual setup with the bounce on that 5-minute time frame chart. I hope you found today's video useful for stock volatility box traders. It gives you an example of how to take advantage of both sectors and their top holdings when they appear on the live scanner. Take care, everyone, and I'll see you in our next update.